There's been lots of talk in the media this week about tech stocks. There's a good chance you'll have heard the acronym FANG in relation to 5 of the US biggest tech companies. So this refers to Facebook, which has since rebranded as Meta, Apple, the iPhone manufacturer, Amazon, the bookshop that sells everything, Netflix, the video streaming service, and Google, which is now listed on the stock market under the name of its parent company, Alphabet Inc. The price of these 5 shares is often used as a barometer for what's going on financially in the world of tech. And some people argue that electric vehicle maker Tesla and computing giant Microsoft should also be included. If your investment portfolio has exposure to the US stock market, there's a good chance you have some or all of these names in the mix. And over the past 2 years, you'd probably be quite happy about that because they've all made huge gains. However, so far in 2022, all of these stocks have seen substantial losses. The worst of the bunch is Netflix, which as at the 26th of January was down 48% against its November peak. If you're investing in the stock market, you need to expect volatility. Every share will have periods where it goes down instead of up. Where this becomes problematic is if your portfolio isn't properly diversified. That means you've concentrated on a narrow range of investments instead of spreading your money around. Tech stocks like these have been hugely hyped over the last 2 years, and that's led some investors to weight their portfolios very heavily towards them. If you've chosen to invest solely in the US stock market, your year has started fairly badly. If you're invested only in US tech stocks, your year has started very badly. And if you're invested purely in Netflix shares, you're probably devastated right now. Now look, this is not a stock tipping service. We're not actually providing any investment advice at all in these videos. Take independent advice before making any decisions with your money. But what these latest market developments, and more importantly, some of the public reaction to them demonstrates, is that too many people have been underestimating the value of diversification. If you're serious about growing your money over the long term, don't put all of your eggs in one basket. Don't back only one horse. That's not investing, that's gambling. And even if you only have a modest amount of capital to invest, there are ways of spreading that across different assets, different markets, different industries, different sectors, different geographical regions, different currencies, the list goes on and on. If you're not confident doing that on your own, or you feel you'd like to know more, then take independent advice, put yourself in an informed position and plan ahead.